Quantum AI investors. It is April 26th. We're doing a recap of the week here. We closed up at 550. I think we have a slight upside target 555 slash 560 is my target for the S&P 500 for the SPY. So I want to see this gap filled here. So maybe we head a little higher in the coming days, and then we consolidate and see what happens. There are two gaps to the downside that need to be filled. So it wouldn't surprise me if we get another bout of volatility after we maybe fill this gap, or who knows, even before then. So we had to keep track of the S&P 500 and the SPY very closely. Again, we're in the fifth wave, I believe, which should end up somewhere around here, maybe in 2026 or so. We are seeing an inverted yield curve, and gold is starting to pull back. I want to see this gap filled in gold and GLD as a shorting opportunity to fill gaps to the downside, and we have plenty of gaps to fill to the downside. That will coincide with the market collapse. So yeah, if I look at 2 versus 10s, year treasuries, treasury on the Fed, we see we do have an inversion of the yield curve. So going back, since however long we can go back for, we see that when the inversion gets to this extreme level, we're 0.55 at April 2025. We are either in a recession already or extremely close to a recession. And I believe we're in the latter. We're extremely close to a recession. I think within the next, let's say, 6 months to a year, we will be in a official recession, as the uninversion of the yield curve has predicted pretty much every time since 1976. So if we're going off of 50 years of data here, it says that basically the uninversion of the yield curve every time has eventually led to a recession. So the one in the 90s, the one in tech bubble, the Great Recession, have all seen this period of uninversion. And we think, oh, we're headed higher. Really, we're in the fifth wave, the Elliott wave. And once that fifth wave ends, then the recession will begin. So it's a question of how long will that fifth wave last. So if we go back to the SPY, again, we expect gold to roll over. If we look at the SPY, the fourth wave lasted about, let's say, 2 to 3 years. So, and the second wave, which was a bull wave, lasted about a year and a half. So I would say my target for the fifth wave ending, if we're beginning the fifth wave starting in April, the fifth wave would end somewhere next year, maybe perhaps early next year. And then once the fifth wave exhausts itself, we'll see a retest of the trend line, and perhaps that will break. And that will tell us we're going to fill these gaps at 420 and 444, and perhaps even lower at that point in time. There's one small gap I've been watching over here, which is at 250 in the SPY. I don't think we'll get it, but nevertheless, it's just something to keep in mind that this could go as extreme as 250 on the S&P 500 or the SPY, and 250 would bring us right back down to 2020 levels, which I think that's where we're going to resolve somewhere in this band here between 350 and 250. So 250 would be right around here. So I think we're going to resolve there. This means lower price. This is deflation, lower prices on houses, lower prices on goods, lower prices all around. Consumer will basically give up at this point. If we break this trend line, I do expect some correction and maybe quickly down to 420, a bounce, and eventually we'll come down here into the buy zone. I think that this is the buy zone here, and here we're just trading. So this is like a trading range, but if you're a long-term investor, you might want to see this huge collapse before really investing in some cheap assets, where you really see a contraction in the market. We haven't seen that contraction yet, so we're still in the fifth wave. So it's really still some time to be bullish, maybe in the short term, until this trend line breaks. So I just want to give you guys a short overview and quick update, recap of the markets this past week. And I hope you like this content. Like, subscribe, and comment. And as always, let the markets be with you. Take care.